mean, percentage wise, historically, that almost never happens where a stable, so-called stable currency like the dollar would gain that much traction.
Hello everyone and welcome to the Daily Crypto. We have Gareth Soloway with us once again, but before we get started with the interview, let's take a quick look at the Fear and Greed Index for today. As of recording this video, it is at 23. Currently Bitcoin and Ethereum are trading for $19,300 and $13.45 respectively. With that out of the way, let's get right into the video.
This area is kind of right now, it's kind of neutral, believe it or not. So we've seen a bounce in Bitcoin where you have some people starting to call, okay, the 17,500 level on Bitcoin was the low. And then you have other people still saying, oh, well, I still think there's more downside. Like myself, the charts still tell me there's more downside, but you're not seeing an overwhelmingly crazy amount of bearish, hysterical sentiment, which to me is an indicator that we haven't fully bottomed yet. You have to get to a point, whether it's the stock market, commodities, or crypto, you have to get to that crazy state of panic, of absolute insanity, fear, for it to finally bottom out. And we just haven't seen that in crypto yet.
Gareth Soloway believes we haven't seen the bottom yet as people still have mixed sentiments. Bottoms are made when people start to question the sustainability of the asset, and we are yet to see such extreme signals.
Yeah, so one of the things you want to look for is you want to look for people that are just throwing in the towel because it's too painful, right? So certainly coming down to 20,000, you had some of that, and even piercing 20,000 on Bitcoin. But you didn't get people saying, you know what, Bitcoin's not going to be around anymore. It's going away. It's going to fail. You need to see that type of fear come in where people that were long at 68, 69,000 now are saying, oh, it's a goner. It's not going to survive. That's where the low will be put in when you get that absolute kind of crazed, kind of irrational panic. Just like it was irrational at the highs, you look for that irrationality at the lows as well.
We need to look out for mass panic among investors, the exact opposite of what we saw when Bitcoin was at 68,000. Everyone was expecting Bitcoin to go to 100K, but that never came. Gareth says a similar market atmosphere will signal a bottom.
Yeah, so here, let me show my charts here and we'll take a look. So basically, you're right. I mean, first of all, the dollar has just had one of the most remarkable rallies, even just this year alone, to go from about 95 bucks all the way to 112, 111 on the Dixie. I mean, percentage wise, historically, that almost never happens where a stable, so-called stable currency like the dollar would gain that much traction. But one of the things you can see is it has a very clear defined trend line right here. So you can see we kind of topped out right here. We've pulled back now and we've seen the stock market rally. We've seen cryptocurrency rally. So I think the most important thing about the dollar is to recognize that a weaker dollar right now is exactly what risk on investors want. They want to see that dollar coming in because what it indicates is that the Fed may not be as aggressive in terms of hiking rates. It all kind of trickles through the Federal Reserve and what expectations are for the next policy meeting and the policy meetings after that. So with the dollar pulling back, we've seen the response, and I could show you the SPX chart here, which is the S&P 500. You can see it coordinates perfectly with this move up right here. So S&P up when the dollar pulls back, and same thing with Bitcoin. If you look at Bitcoin, BTC here, you can see that this rally on Bitcoin coordinated perfectly with that pullback in the dollar as well.
As the dollar continues to grow stronger, risk assets have been hit severely, including Bitcoin. As soon as the dollar starts to fall, we will see risk assets start to move up. It has already started to happen because the S&P and Bitcoin have bounced since the dollar has dropped slightly.
So I think the dollar has a few things working towards it or working for it. Number one, the Federal Reserve has talked the most hawkish game. We saw Jackson Hole's comments from Jerome Powell. We've seen, him coming out continually and just being super, super hawkish. We're going to raise interest rates as much as we need to. And what that does is it strengthens the dollar because as expectations for higher interest rates. So basically when interest rates go up, it draws money out of the economy, right? So it sucks money out. So you have less dollars in the economy to be invested or to just in general be used. And that creates it's a supply demand basic mentality of less dollars and equal demand means the price of the dollar must go up. Then you also have the scenarios where you have the risk of Russia with Ukraine, these global geopolitical issues, which historically have had investors rushing into the dollar for safety. So there's that added aspect as well. And then you also have the kind of the economic aspects where we know that Europe is struggling. Their economy is likely going into recession. We have other areas of the world, maybe the whole world, heading towards a global recession. And same thing, it makes people want to buy the dollar for safety. So, everyone talked, and this is crazy because in 2021, it was all about the demise of the dollar. The dollar is going to collapse. That's why Bitcoin's going to keep going to 100 to 200 to 300, right? 1,000, obviously. But in reality, the dollar has been the best performing asset out there, in spite of all that chatter. And again, that's just basically because the dollar is still king on the block. You have yen, they're printing just as much, if not more. Europe is the same thing. The dollar is still the reserve currency of the world.
There are many reasons as to why the dollar has gained the strength it has this year, but perhaps the biggest factor is the risk of a global recession. Historically, investors have stocked up on dollars during times of economic uncertainty, and this time is no different. It's basic supply-demand. As investors require more dollars, its value increases.
I think ETH saw a lot of the upside gains, over the last month, and it's kind of pulled back a little bit. I do think that if the merge goes smoothly, you may see kind of a relief, right? And I think the whole crypto sector is kind of a little nervous here too, is because if somehow it gets messed up, that would be bad for the whole crypto sector. I think it will go smoothly. I think that's why they delayed it so long, to make sure it goes smoothly. And so I think afterwards you see a very short-lived kind of sigh of relief. And then I think all eyes start turning back to risk assets. What's the Fed doing? What's the dollar doing? What's the global economy doing? And that will be in control again. So I think this is kind of a narrative changer just in the short term. But I think, again, eventually after it, you'll see a resumption of whatever risk assets are doing, crypto as a whole is going to do.
The ETH merge has been anticipated for a long time, and now that it's finally here, it will set the tone for the entire crypto space's sentiment. Gareth says if everything goes smoothly, it will be a new milestone in the crypto world as the second largest cryptocurrency shifts from a proof of work to a proof of stake model.
I'm still optimistic. So go back to the beginning of this year. I honestly thought we would be above 2,000 by now already. I think I had an end of year price target of 2,400. So right now that's not going to happen, right? I mean, it's just the dollar is too strong. It would take a big dollar collapse in a very short period of time into year end to get us to that level. Having said that, there's no denying that you still have this bullish consolidation pattern on the gold chart. So what you can clearly see here is you have this bigger move to the upside, and then this is all sideways chop, and eventually this should lead to a breakout. So I do think we could be close to 2,000 by the end of the year. I love the fact that this lower level is holding. If the dollar is getting near a high, which I do think it's kind of getting near a major top, then I do think gold will be an outperformer towards the end of the year. I just don't, it's hard to imagine it getting through this double top high into year end. I think next year it does, but into year end, probably not. So I think, again, close to 2,000 by year end, you still think about, and then look for that bigger breakout next year. And I think that bigger breakout will be accompanied with a realization that the Fed, the economy has weakened so much, but inflation is still higher than 2%. But as the economy weakens more and more, the Fed can't tighten anymore to control inflation. And eventually, I think the Fed will even go back to lowering rates and printing.
Gareth had a price target of 2,400 by the year end for gold, but he says that's not going to happen as that theory was based on a weakening dollar. For it to come true, the US dollar will have to fall quite a lot and in a very short period of time, which is unlikely to happen because the Fed will step in and prevent it from happening.
Yeah, I think for me, it's been more of a nimble market. So there's still a lot of trading opportunities, but I'm recognizing the quick moves in this market. And so I was long a few tech stocks over the last few days. I've been unloading those, and now I've actually started to short the S&P and the NASDAQ a little bit here after such dramatic near-term gains. But for me, it's much more of a very short-term swing trader mentality, where eventually I think the NASDAQ and S&P are going to break sharply lower. We're going to take out the June lows, maybe by year end even. But there's going to be so many of these crazy whips up and down in the near term that it's much more profitable to kind of play them, the ups and the downs. So I'm still trading a fair amount, But I agree. If you're someone out there who has to be a little bit more careful, maybe you don't fully understand the charts, you got to be really careful in this market, and you should be sitting mostly on the sidelines.
While most traders avoid times of volatility, Gareth says there are plenty of opportunities to capitalize on. He reveals that he has been offloading some of his tech stock positions and entering new short positions on the Nasdaq and S&P. Thank you for watching this video. Please like this video and subscribe to our channel to keep watching informative content like this on a daily basis. See you guys in the next one.